Hello traders and welcome to another video review. Today is Friday the 7th of May 2021. It's non-farm payroll Friday, so it's going to be a very interesting day. But let's take a look at the economic calendar first. Most of the data had been published already overnight. Monetary policy statement from the Reserve Bank of Australia had been issued at 2:30, and 2:30 had been issued as CPI from China, as you can see here, together with PPI, market services, and market composite PMI. Both of them were better than expected figures, so that's a very nice data from Australia. During the London session, we got some data from the Eurozone, not that much important. We got the unemployment rate, industrial production from and trade balance from Germany, trade balance and industrial production from France. Construction PMI from UK is scheduled for release 9:30. Very interesting. And the European Commission economic forecast are scheduled for release at 10 o'clock. We got some speeches from the Bank of England Deputy Governor of Monetary Policy, Ben Broadbent, 12 p.m. and from the MPC member Andy Halliday as well 12. During the New York session, as I said, it's non-farm payrolls Friday, so we have unemployment rate from the US scheduled for release 1:30, and non-farm payrolls scheduled for release 1:30 as well. Unemployment rate is expected to drop from 6% to 5.8%, and non-farm payrolls are expected to increase from 916,000 to 990,000. There should be average hourly earnings data as well, and they should increase from minus 0.1% to 0%. Together with this data, we got the data from Canada. The unemployment rate is scheduled for release 1:30 as well. It should increase in Canada from 7.5% to 7.8%, and employment change should decrease from 303,000 to minus 160. Participation rate should decrease from 65% to 64.9%, and there is of course IV Purchasing Managers Index from Canada scheduled for release at 3 o'clock. It should drop from 72.9 points to 67 points. So plenty of data during the New York session. It might be a very interesting Friday, so we should definitely take a look on the US dollar index. What do we have here? As you possibly remember, is some sort of corrective wave ABC to the upside completed. Then we have first wave to the downside, wave A, terminated at the level of 90.39. A slight bounce towards this zone of the technical resistances, 91.03 with a high of 91.41. So that's our zone right now of the technical resistance. Let me just add the newest level. There you go, this high here. We got the shooting star, a candlestick at the end of this short rally. So maybe this wave B had been completed here, but I think it might be too shallow yet for the wave B to complete. But however, if we just ignore that and follow the market, if this is the wave B, we are missing the wave C to the downside, of course. Or maybe please remember that the other way of counting this recent wave development is wave 1 or A, 2 or B, and 3 or C. So we will apparently be more confident in our count once the low of the wave A is violated, whether it will be impulsive or corrective in nature. However, it doesn't matter how you look at this. Right now, we are still missing wave to the downside. It doesn't matter if you call it wave 3 or wave C. It's still the same thing. The bounce in the wave B might have been completed already. 91.41 is the high, and now if the level of 90.39, which is the low of the wave A, is violated, let me just put it on the chart for the short term. So if this level is violated, then of course we will have another low, and the market will continue that downtrend that is still persistent, still ongoing on the US dollar index, right? If we zoom out, we can clearly see now it's gonna be very messy, but the point is that this is still a downtrend. We are approaching very important levels like this low from 2018, but we are still not there yet. Okay, so the downtrend will be continued on the US dollar index. It should be continued according to our technical analysis. So US dollar index, let's take a look at the Australian dollar because of the Chinese data, and as you can see, we have a bounce, another lower volatility week is closing this week, because we got the 7 last candles. This is daily time chart, of course, so the 7 last candles, as you can see here, are being drawn between the 50% of the Fibonacci retracement, 7,675, which is here, and of course the technical resistance at 7,822. So far, the market is closed between these two levels, retracements and the technical resistance. It is bouncing up and down from this supposed neckline as well. But so far there is no real breakout, no real breakthrough in this case of Aussie. So as you can see, the RSI is still bouncing from the level of 50, because the level of 50 is the neutral level for the momentum. It will divide this momentum from bearish to bullish. And the market participant doesn't want to go down. They doesn't want the market to penetrate lower levels like 61% of the Fibonacci retracement, which is why the momentum keeps bouncing from the level of 50 neutral level back into the bullish territory. How long it will last, we don't know, but any breakout above 7,822 is of course bullish. Any breakout to the downside, lower, step by step towards 61% of the Fibonacci retracement, or even lower, is of course a bearish continuation of this pattern. Let's take a look at euro dollar. Why euro dollar? Because of the non-farm payrolls. As you can see here, we are out of the channel. We tested 1.1993. There is a bounce on the daily time frame. Let me just zoom in. We'll just concentrate on the recent developments. We have a bounce. This is the local technical resistance here at the top of this rally from 29th of the April, and now this level is still, let's say, it's still green. Okay, it's still a support, and the market is being closed between the levels of 1.22, 1.1993. Of course, the about conditions where the situation were just resolved from the overbought conditions. So we have this breakout down, we have the momentum down, and right now we will just wait for the market reaction on the NFP data. Of course, breakout below 19.93 opens the road towards 1.1952, and then there is a gap towards 1.1831. So this is over 100 pips here. Okay, but if market reacts in the more aggressive and bullish way, then we have a local temporary local high 1.2150, and then of course the key technical resistance 1.22 to be tested and maybe even violated. It all depends on the market. Right now we are waiting for the data. We use the Japanese yen. Yeah, this is the last one for today. US dollar to the Japanese yen. As you can see, we are bouncing a little bit higher. 61% of the Fibonacci retracement had been already tested, so we can get rid of the previous previous lower ones, 61%, 109.66. The high was at the level 109.71, so it's only 5 pips higher. We have a reversal candle, slightly crossed the short-term trend line tag. We broke above it, we crossed it, but there is no close above the trend line. All of the closes are below the trend line, and of course right now tight range market awaits the NFP data. Support is at the level of this one is 109.01. Those are the other technical supports, 108.41, 108.18. So we got like 3 more technical supports, and it looks like this current development looks like a bounce. So we expect the market to come lower, towards lower, of course, technical locations or the Fibonacci retracements. And the gold, the last one, we got a breakout back into the channel. So we have this breakout back into the channel, and above 100% of the Fibonacci extension. So right now the local technical support is 1798, which is this blue line. This technical support had been tested, and it looks like the market wants to go higher towards this level. Possibly we will target, oh, there's one more first, sorry, 1848 or 1858 or 1865. This is very nice zone for the bulls. Of course, the key technical resistance has not been tested yet. It's way higher, but right now this rally, this bounce after the drop at the beginning of the year towards the end of the March, this rally is getting stronger, and those are the next targets for the rally. 100 is being hit already. We can remove this one, and we have only our interesting zone between these two levels. It might be hit. Of course, if gold goes up, if US dollar and Japanese yen goes down, and if euro dollar goes up, that means the US dollar index, after the NFP reaction, after the NFP data, and after the NFP market reaction, might be going, of course, down. So please consider this into your analysis as well. That's everything for me for today. Thank you very much for watching this, and I hope I see you guys on Monday again. Take care, happy trading, and bye bye.